Hello and welcome to the November Market Thoughts video. I'm Commonwealth's Chief Investment Officer, Brad McMillan. It's been an interesting month. We opened the month with a confrontation between two sides, each of which was convinced they were right, each of which was not going to back down, was not going to yield the victory. And it went back and forth and up and down, and there was a tremendous amount of suspense and worry, but in the end, the good guys won. I'm talking, of course, about the Boston Red Sox winning the World Series. Go Sox. However, there are other things we should talk about as well. I think the first is what mesmerized all of us at the start of the month. The government shutdown, the confrontation between the Republicans and the Democrats, and then ultimately the very real possibility of default on the debt of the United States. The consequences of that would have been catastrophic, and that was the real issue in play here. And at the end of the day, even though the two sides came to a sort of agreement, they didn't settle the problem. Instead, they agreed to kick the can down the road one more time. And that, interestingly, was a very, very positive development for a couple of reasons. First of all, by kicking the can down the road in the way they did, by allowing the Treasury to reload its bag of tricks, by kicking it down the road until the start of next year, they bought enough time to get to April 15th. And as you may remember, that's when the tax money starts coming in. So this agreement, even though it's kicking the can down the road, nonetheless takes the debt ceiling issue and the default issue off the table for quite a long time to come. And that's very, very good news for the economy. And the markets reacted to that. We hit another all-time high for the S&P. Other indices did well as well. We've seen markets rise for 3 straight weeks and going on a 4th. Interest rates have ticked back down. At the end of the month, the Federal Reserve said it was going to continue its stimulus program. No one expected them to cut it off at this point. They don't really have the data. They're very aware of the uncertainty in the economy that's been created by the debate in D.C. But nonetheless, it was a nice confirmation, and that enables, again, the markets to continue to rally and to do well. For the real economy, things aren't quite as clear-cut. The uncertainty created by the confrontation, and remember, this is not over yet. We'll continue to see headlines coming out of Washington, D.C. That has at least slowed and might slow considerably the real economy. At this point, it doesn't really look like it will. We've seen employment, although it ticked up, is drifting back down. We've seen manufacturing continue to do well. So the real economy looks likely to continue its recovery. That should continue to support the stock market. And at this point, we end the month in a considerably better position than we started it. We'll see what happens next month. I'll talk to you then. Thank you very much.